Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial mumbo jumbo and tell you what it really means. Today we have a fascinating look into Blackstone Private Credit Fund and what they've been up to. Let's just say they are not afraid of a little leverage and they seem to be getting the job done. If you enjoy getting straight answers and distilled insights from complex financial documents, make sure you are subscribed and hit that notification bell. And hey, before we dive in, we have a thriving Discord community where we break down these filings even further. Link is in the description below, so join us there. Alright, let's get into it. This is a current report from Blackstone Private Credit Fund, or BC Cred as they like to call it. It is dated the 31st of October 2025, and it is giving us a peek at their performance and strategy as of the 30th of September 2025. Now for the juicy stuff, the portfolio commentary. BC Cred is talking about strong performance and disciplined risk management. They're bragging about a 10.0% total net return since they started outperforming traditional investments like leveraged loans and bonds. That sounds good on paper, but let's see if the numbers back it up. They say their portfolio is 96% senior secured debt. That means when things go sideways, they are at the front of the line to get their money back. They also mention a loan-to-value ratio of 45%. This means that the value of the companies they lend to is more than double the amount they've lent out, which is a pretty strong buffer. Let's look at some of the numbers from their portfolio companies. The average issuer LTM EBITDA, the measure of a company's earnings before interest, taxes, depreciation, and amortization over the last 12 months, is $256 million. This is quite a bit higher than the average in the private credit market, which they put at $99 million. Higher earnings for their borrowers usually means a lower risk of default, and that loan to value or LTV is another key number. They're reporting an average loan to value of 45% across their entire investment portfolio. This is a really important metric in lending. It basically tells you how much collateral backs up the loans. A lower LTV means there is more of a cushion if the borrower can't pay. BC Cred invested $6.8 billion this quarter, which is a massive number. Out of that, $2.1 billion went into new private debt investments. They highlight that 97% of these were first lien loans with a pretty good loan to value of 40% and a weighted average yield of 9.1%. That yield is significant. It means they're getting paid well for the risk they're taking. They are really leaning into the advantages of private credit. They say it offers speed, certainty, and tailored solutions, whereas traditional loans are more standardized. They also point out that private loans are currently priced at about a 170 basis point premium to leveraged loans, meaning they offer a higher return. A big part of their strategy is leveraging the Blackstone platform. They have over 550 sponsor and advisor relationships, which helps them get access to exclusive deals. They even give an example of leading a $1.75 billion senior secured financing for a life sciences company called Signant Health. This shows they are not just passively investing, they are actively creating opportunities. When they talk about stability, they mention that only 8% of their portfolio is exposed to what they call quoted assets. This is likely referring to publicly traded securities. They prefer private loans because their valuations are updated less frequently based on fundamentals, meaning less wild swings due to market sentiment. Now let's talk about potential problems. The non-accrual rate, which is the percentage of loans that are not paying back interest or principal, is only 0.4% at cost. This is very low and they claim it is well below their peers. A low non-accrual rate is a very positive sign for a credit fund. Looking at some summary statistics, we see the earnings yield for Class I shares is 9.6% and the annualized distribution rate is 10.5%. These are the returns they are paying out to investors. For investors seeking income, this is a key figure. The annualized distribution rate for Class I shares is pretty attractive at 10.5%. This means for every $100 invested, they are distributing about $10.5 per year. This is a significant part of their appeal for income-focused investors. Under assets, we see the important figures like senior secured debt at 96% and floating rate investments at 96%. Floating rate debt is interesting because as interest rates change, so does the income from these loans. If rates go up, which they have been doing, their income goes up too. Private investments or level 3 investments are at 92%. These are assets whose values are determined using significant unobservable inputs. This is where a lot of the valuation judgment comes into play. Focusing on those new private debt investments for the third quarter of 2025, they put $2.1 billion to work. Again, 97% first lien, 40% loan to value, and a weighted average yield of 9.1%. These numbers are consistently strong and show a disciplined approach to deploying capital. And then there is the BXCI or Blackstone Credit and Insurance North America Direct Lending strategy. They boast a truly impressive loss rate of just 0.08%. This is from 2006 through September 2025, a very long track record. This is remarkably low and speaks to their ability to select and manage credit risk over many economic cycles. Now, as always, they include a disclaimer that past performance does not predict future returns, and that is absolutely true. But when you see a consistent track record like this from an experienced manager, it does give you confidence. This is a critical disclosure. The report explicitly states BC Cred intends to borrow money. This leverage can magnify returns when things go well, but it can also magnify losses when things go poorly. They warn that the use of leverage involves a high degree of financial risk and will increase exposure to adverse economic factors. This is why their low non-accrual rate and strong collateral positions are so important. If they are using leverage, they need to be very good at managing risk. As we wrap up, remember this report is meant to inform, not to sell. It is not an offer to buy or sell securities. They also have a section on case studies, which often highlight successful deals. While these are illustrative and not guaranteed to repeat, they do give a flavor of the types of investments they pursue and the expertise they bring. So what is the verdict on Blackstone Private Credit Fund? They are clearly a major player in the private credit space. Their strategy seems focused on high-quality senior secured loans with strong borrower fundamentals. The leverage they employ is a double-edged sword, but their track record, especially the incredibly low loss rate from BXI, suggests they know how to handle it. The yields they are achieving are attractive, and their scale and platform give them a significant advantage in sourcing deals. The risks are undeniably there with leverage, but their emphasis on senior secured positions and low loan-to-value ratios provides a solid foundation. The consistent deployment of capital into new investments with good yields indicates a healthy pipeline and continued demand for their services. In my opinion, BC Cred is showing a disciplined approach to a complex market. They leverage their expertise and platform to generate strong risk-adjusted returns, while the inherent risks of private credit and leverage should never be ignored. Their reported performance and low default rates are very compelling. Alright, that is our deep dive into the Blackstone Private Credit Fund report. What is your take on their strategy and those impressive numbers? Drop your thoughts into the comments below. If you found this breakdown valuable, please hit that like button and subscribe for more decoded corporate insights. And don't forget to join our Discord community for even more in-depth discussions. Thanks for watching, and we'll see you in the next video.